Well, Keelan and I are back for a hot takes with the two of us, and we've been on a break a little bit because of the holidays and the summertime. So, Keelan, it's great to have you back for our episode number 24.
I'm excited to be back and in great timing too. There's lots of news today.
I'm excited to hear what's been happening. I know I've been hearing kind of the grumblings on the TV and the radio of what's happening with the economy, but I wanted to get it from you because I know that you keep such a good eye on it.
Yeah, I'm super excited. Today's a huge day for us in the market. Do you want me to get into it now or
Yeah, dive in, I
dive
think,
in?
right? I mean,
So,
we haven't talked for a while,
I'm
so
like bubbling right now because we're up 35 basis points, and we've been all the experts, including myself, have been really frustrated. And I don't know if they're doing it on purpose, but we've seen a lot of manipulation in data, like the inflation and jobs report. These affect mortgage rates because when what the Fed is looking for is the economy to be in bad shape, not good shape, and everything when you look underneath the hood shows us that it's in bad shape, and then all of a sudden you get a BLS jobs report and it's showing a bunch of jobs gained, and we're like, what the heck, like, and it doesn't make sense. But what they've been doing is they've been putting out these headline numbers and then revising them, and so we're all kind of just sitting back and we're like, eventually the cat's got to get out of the bag. There's just too much to hide, there's too much data, there's too much going on for them to continue to fluff these numbers with the BLS and the CPI. And so today was a huge win for us and the bond market, which is good for mortgage rates.
okay.
So the BLS jobs report came out and showed 114,000 jobs when they expected 175. So that's below expectation, which in turn is fantastic for mortgage rates. Hence why we're up 35 basis points today. When I say up, I'm talking about mortgage-backed securities, meaning it goes up, but that means mortgage rates go down.
Okay.
So just to clarify, because I probably confuse
I
everybody
mean, this is your
about that.
daily lingo. For us, it's like,
Yeah.
and I'm getting better with it because I hear it from you so much, but for the layman out there, it might not be quite as understandable. So,
Yeah, I just speak mortgage. So if you have questions, call me. It's like, what the heck were you talking about, Keelan? But and then not only that, up to their old tricks, 272 jobs in May was the headline number. Of course, they revised it to 218 and then revised it again to 216. And then in June, they said 206,000 jobs. They revised it to 179.
okay.
So like the question is, what would really happen with mortgage rates if those true headline numbers came out right when they were supposed to, right? But there's like some kind of fluffy, funny business, and everybody's paying, like all the investors and everybody pays attention to that headline number. They're not kind of scooping back and looking in the past at these revisions. So,
Right.
I mean, it's really done us a disservice for really the entire year. Rates have definitely stayed higher for longer, but not only that, but we've kind of rebounded this week as well. There's been other data. So the part that kills me the most is the birth death model. And because the number is just so inaccurate, all of us were fuming when we saw this number. Birth death is talking about the death of business. It's showing a growth in 246,000 jobs, which is crazy because ADP, the software that everybody uses for
Okay.
payroll and everything, says we're at minus 7,000 jobs, negative 7,000, negative 7,246. Little discrepancy there. But if this
Right.
would have came out anywhere appropriately where it should have, we would have had a crazy low number today, and the market would have adjusted accordingly.
Hmm.
Hence why it just feels like a lot of games being played and a lot of inaccuracies, which are frustrating because we live in this world and
Right.
people are trying to buy homes and like things are happening. And from what people are saying about our economy, and I don't know about you guys, but how it feels to me,
Right.
you know what I mean? It's tough. So I mean I feel like we really need some relief, and to kind of put it in a nutshell, the beauty of all this is this puts a lot of pressure on the Fed. Remember I talking about September Fed cut?
Right.
They're talking
That's what
about 20.
I'm hoping to hear about. I want to hear what you have to say about that.
Yeah, I mean, everybody's thinking now the six cuts didn't happen this year. This has all been prolonged. It all came down to this moment where September they're talking about the first rate cut and they're talking about 25 basis points. But I mean, now with this news coming out and all this, downside in the economy, they're looking at the odds makers. There's odds makers, people making odds on what the Fed's going to do.
Right.
it's oscillating at this point because it's real-time data coming out, but there is a 60 to 70% chance of a 50 basis point cut, which is going to really help mortgage rates. And I mean, all in all, people, the point is what we say was going to happen. Rates are going down. We're really starting to pick up some momentum. Of course, we have an election coming up.
Right.
That'll be interesting. But I mean, the Fed being the Fed and what they should be doing, everything points to rates going down and sooner than later, finally.
Finally. Well, and I feel that we've been waiting for this. Like all year, we've had these conversations, like biting our nails, like, okay, are they gonna, is this gonna be the meeting that they go ahead and drop rates? And they haven't, and I agree. I know everybody I speak with is feeling it. I mean, just and where I'm noticing it the most, obviously, is like when I go to the grocery store and buy basic needs, like contact
Absolutely.
solution for a small 10-ounce bottle was $15. And I was like, what? And that's why I go
Yeah.
to Costco for those things. But still, it's like those types of things where you're just like, okay, we're all feeling it. But when you go and you're spending money at the grocery store and it's not getting you barely anything, it's a little bit of a shocker, even for, people that aren't living paycheck to paycheck. If you are on a budget, those are the conversations I've been having a lot with my family and the people that are close to me of just like how difficult it is right now just with everything. So I'm happy to hear that there, will be some relief in this department. Hopefully it'll help trickle down.
Yeah, there's a lot of people that want to get into houses, and I think they should, and we should all be able to do that. That's the American dream, and I feel really bad for a lot of those that are just getting into the marketplace. It's really difficult right now, and 100% gas, everything is so expensive. So
Right.
putting money aside to save and really making a difference for your family has been tough, and that's what's really most important
Right.
is helping people to make their dreams come alive. I mean, my most powerful asset has always been real estate. And I'd
Right.
love for every single human out there to have the ability to get into real estate and change their family's lives. And,
Right.
so the frustration comes from a warm, loving place. We want to see this happen for people and we want to see the market change. And, we've been living in this kind of monotony and we're ready to turn the page. Let's go to the next chapter.
Right. Right. Well, I do think, it feels good to feel like that there's some relief on the horizon. I have some buyers I'm working with and they're, working on pre-approvals and knowing that in the next couple of months when they're actually ready to pull the trigger that it might be better for them. I mean, it's going to put smile on people's faces and make it a little bit more not as tight. I mean, buying a house it's a big decision and it's a huge milestone. And, if you buy in this market, it's a little bit of a stretch, but knowing that there's some relief coming, it won't be, such a shock to the system.
Yeah, absolutely. We have bright future ahead of us. We got great things on the horizon. I'm actually having customers say I'm pleasantly surprised that the rate is better than I thought, as opposed to, wow, that's a high rate. It's like,
Right.
yeah,
Well, and
I
didn't
mean,
you say right now they're hovering kind of in the sixes right now?
they're below 7, that's
Below
for
seven,
sure, which,
below
yeah,
seven,
which
that's a big deal.
that's a big deal. I mean,
Right.
everything's been hanging out and vacillating in the 7%. We did touch a little bit below months ago for a brief moment, but we've been really kind of chilling in the 7% world.
Right. It's been
So,
hovering.
yeah, I feel like now we're chilling in the 6% world, which that's where we want to hang out. I'd love to hang out in like the 5 or the 4s, but
Well, and with this, if they do increase, the basis points by 50 points, in September, which is, I mean, it's August, September is next month, which is nuts to even think about.
yeah.
But I mean, how much of an improvement would that be? Would it be just a 0.5% or almost a full percent? And obviously it depends on somebody's credit worthiness and their financial profile, but
Yeah, it's tough to say. And mortgage companies aren't dummies. They don't just they like to fluff things. So in anticipation of news, they'll already make adjustments and build it into rates. So
okay.
it's not and not many people know about that. It's not just kind of like a, Fed cut, boom, it's 1% lower today,
Right,
right?
right.
So they try to kind of anticipate and lighten the blows, right? So there's not as many highs and lows and things like that. But I'll tell you, I mean, a 50 basis point cuts leaves them I mean, we'll start seeing that actually go into the marketplace much or before that even happens.
Okay.
So, we'll start seeing that getting built into rates and the more data that comes out, we're already on quite the streak right now. I mean, we're up a couple hundred basis points in the Again, mortgage-backed securities up,
Yeah.
meaning rates go down. So rates have already improved significantly, and they're just going to continue down that trend if this continues and all this data keeps coming out. I mean, that could be, that could be a 0.5%. It could be 3/4 in rate. There's a lot that could happen. It could be a quarter. It just depends really on the other outlying factors in the economy and data and figures where
Right.
they're feeling comfortable. Because at the end of the day, what mortgage companies do is they're making you a promise. And so when we lock a loan, like when we get in a contract, we lock a loan. You have a choice to lock or float. So floating means we're just going to ride the market and it is what it is. You're doing this all the way to the end. Eventually, you have to lock it before the loan closes. A lot of times, especially in this market, we lock them right out of the gate because most of the time those that gambled have lost,
Right.
right?
Right.
But that's actually just a promise from the mortgage company that this is the rate you're going to get in the end. So this is a promise. So if the rates get better, then the mortgage company wins. If the rates get worse, the mortgage company loses, right? So it's like they're betting, they're making bets on it, right? Is basically what it is. So that's kind of the wizard behind the curtain. And mortgage companies lose a ton of money if they do it wrong. So that's
Right.
why they kind of put these checks and balances, and it's really hard to say an exact figure based on basis points.
Well, and it seems like the market is so volatile just on headlines. Like
Yeah,
if they say anything negative, derogatory, or whatnot, then everything seems to just like react immediately because it's just such a touchy world, touchy subject. So,
yeah.
um,
Every little piece of data that comes out, like the market reacts crazy. It's really volatile right now, and
right.
there's a reason we lost half of our industry. Mortgage companies are imploding everywhere. We've lost half of loan officers in the entire country basically at this point.
Yep.
I feel very blessed to, I'm doing better than most, and I'm still here.
Right.
But I feel
Same
I
with
feel bad.
agents. Same
It's
with
same with
agents.
agents.
Yeah.
Yeah,
There's
I
a
feel
lot of people
bad.
that haven't renewed their licenses because of just the difficulty in the market. And it's been, a challenge. But the way I look at it is it's opportunity and it's a way to sharpen the saw and it's a way to focus on other loan opportunities or things that come up that normally maybe you wouldn't look at considering if you're in a hot market. So I always just look at it, it's an opportunity to make yourself better. So,
Absolutely. And I mean, that's why I bought in October in the highest rates. I'm doing the opposite of what the market's doing,
right.
because
But
that's when you win, right?
well, you were able to negotiate a great price on this fabulous home of yours. So, I mean, there's strategy to all of it. It just Keelan and I talk about this a lot with just the change in the market. And if you're ready to buy, if it's the right time for you, it's good to have those conversations because depending on what your financial abilities are, we can put a strategy together based on what your needs are and the market. So, if you're ready to buy, it's not a bad time to buy. You might just do things a little differently or fashion your loan a little differently. So I encourage people to call and ask questions. And if you've got questions about the real estate market or you're looking to buy or you're looking to sell, I would love to chat with you. Please give me a call. My phone number is 206-330-6985.
And mine is 206-321-4941.
So yeah, any questions coming up about loans, make sure you give Keelan a call because it sounds like things are going to be changing and it might be time to have those conversations a little bit more seriously. So, well, Keelan, thank you for your time today. It was great to connect after such a long break.
Well, thank you for your time too. We're humans. We got to have fun in the summer too, right?
Right. Yes. So, okay. Well, take care. Have a good day, everybody.
See you, everybody.